So good morning. Welcome to episode 4 of The Naked Truth with Multifamily. So I have special guest today, Peter Seed from Vancouver, British Columbia. So Peter, welcome to the show.
Wow, thanks very much for inviting me. Appreciate your gesture.
Yeah, so love the background there. So look, you're in Vancouver, British Columbia. But so today we're going to talk about Northern British Columbia in particular. But maybe why don't we start out by just, maybe introducing yourself, giving us a little bit of your background in commercial real estate in British Columbia.
Sure. Well, I know I'm dating myself here, but I have been licensed consistently, continuously since 1989. Started off at a smaller boutique firm for 3 or 4 years, and then, of course, had the privilege to come on over to what was then Goddard and Smith, which subsequently has morphed into sort of a global managed network, head office in New York. And so there's about 475 independently owned, and in some cases groups of offices all over the world. And I've been here, great privilege since 1992.
Oh, that's quite a long time. So you've seen a lot of jolts in the market. You're obviously around before, multifamily in Vancouver was selling at 500,000 a door, right?
Absolutely. And I'm 5th generation from Vancouver. And so I'm doubly surprised that its prominence as an investment vehicle.
Awesome. So I want to just, quickly introduce the role of the broker. I tell a lot of people talk to me about multifamily and, maybe how they think it's best to get a building. And a lot of people say, well, I'm just going to go directly to the seller. I'm going to do a yellow letter campaign. I'm going to go door to door. I don't need a broker. But in my experience, probably 90% plus of all multifamily transactions, at least in my markets on the prairies, go through a broker such as yourself. Would you agree with that?
Absolutely. There's a small percentage of a very sophisticated investor who has the skill set to draft contracts and to quarterback his own transaction. But not only is it getting more complex, and there's more rules and regulations in terms of the environmental and financing and whatnot. But by the same token, having a quarterback to manage the transaction saves a lot of time, and in the end of the day, money for either a buyer or a seller, depending which side of the file a broker may be on.
Right. Okay. I know they've changed some laws in BC with regards to dual agency and stuff like that. So I imagine you guys have had to adjust like everyone else has. It used to be one broker could represent both parties, but I don't think that's the case anymore. Is that right?
Yeah, absolutely. The rules and regulations have changed drastically in the last couple of years. I mean, it's primarily aimed at the residential sales market, where there was a fairly small group of people that were involved with flipping and assignments, and maybe lacked the skill set to properly document the transaction, and of course, the minute something goes wrong, everybody wants to blame the broker. And if the broker lacks a degree of sophistication, then it just muddies the water. So it's a great protection mechanism, but it isn't, necessarily geared at the commercial marketplace. And of course, that said, every transaction is different. I mean, some cases, buyers and sellers both want a broker on their side, on either side of the file. Other cases, if it's complex, then two brokers communicating might create some unnecessary issues. So we're all doing, especially the commercial guys, we're all doing whatever best protects the public and best advances, the interests of, either side of the file. Nobody's looking to do anything untoward other than, perform in the marketplace, get good results, and of course, advance our own careers.
Yeah, no, absolutely. I would agree with all of that. I just had a quick look this morning at, you guys' transactions for 2022, and I'm absolutely stunned with the amount of volume. I'm just gonna sort of target Prince George because I noticed a lot of multifamily. So in that area, and the first thing that really caught my eye is there was more than one of these really like 50 plus suite buildings, which at least in my market in Edmonton and in Saskatoon, Saskatchewan, like you don't see those buildings transact very often. So
Right.
in 2022, it looked like I kind of lost count, but there were several of those larger transactions. Now, I don't know exactly how many units transacted in Prince George this year, but it seems like it was a pretty active market.
Yeah, and excellent observation. So, in the case of Prince George, obviously, for a bunch of newer buildings to come to the market, I mean, think of it this way: the planning process started 5 years ago. You've got strong commodity markets, products of other industries that are doing well. And so in the case of Prince George, it's becoming much more of a vertically integrated economy. So not only is there room to to build buildings and have them fully occupied, but also in the stream of things, there's a certain type of developer that will build a building and bring it to the market as an investment for, in this case, probably more third-party investors. It's Your guess is as good as mine why certain people are bringing their newer buildings to the market. I'm aware of a few fairly large ones that are quite confidentially being, handled. I have one under contract now that's 76 units, and it's 13+ million contract price, and it's moving along. So I guess the fundamental is the market is has sort of pre-planned itself, with these new buildings, and yeah, they're valuable. The yields are good. Generally speaking, the occupants are good. People, tend to live in these, sort of northern cities for some very good reasons. They're working hard, doing well, and there's a degree of transience, but typically people are oftentimes in certain cities for very good reasons.
Yeah, and I noticed, these transactions, with new construction as well. I mean, a lot of the buildings that transact, these are like 40+ year old apartment buildings, correct?
Yeah, yeah. Well, I mean, it's a double-edged sword. Some of these older buildings are exceedingly well built. They stand the test of time. Of course, they've got regular maintenance. Every 20 years you need a roof and a boiler. Sometimes windows, patios. It really varies depending on the precise location and the type of weather exposure that particular buildings receive. But across the board, even the newer buildings are, if you buy the land right and you build a nice building, well, it's, in my world, that's a real it's a real deal. It 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 has value over and above just a simple yield or capitalization rate.
Right. For some reason, like northern BC, like I used to work in the oil and gas industry, and I know Fort St. John, these areas, they're kind of oil and gas reliant as well. But northern BC seemed to really escape unscathed, when the oil crash happened in Alberta. I had a lot of multifamily in Alberta and Saskatchewan. And the years from, 2015 to 2020 were downright ugly. Like we went through massive rent reductions, vacancies. And when I interviewed Adriano with Prince George, he didn't experience any of that. It was just a nice steady tick up in for a
Yeah,
smaller community. And I thought that was
yeah.
very distinct.
Yeah. Okay. So two points to that. First one is Adriano is a fabulous landlord. He understands that marketplace as well or better than anybody else. So I mean, he has a lot of buildings now and knows how to manage people, manage their expectations. He treats them right, so he's always going to be full. Second part is I just 6 months ago sold 105 buildings, a portfolio in Fort St. John, and it's kind of the same thing. I mean, it was an excellent owner manager that owned the buildings, and just due to a bunch of sort of investor issues, just passage of time to do something else, they decided to sell, and the group that bought it is full as well. And again, I think it goes back to, if you run an asset well, you do have a somewhat of a transient population that will keep it full. So, Fort St. John is somewhat like Prince George. It's vertically integrated. There's lots of different up and downstream aspects of the oil and gas industry. And, Site C is a big employer as well. I mean, and so, if you springboard from some of these bigger projects, then you've got there's room for other industries, and companies to do well, and that all requires employment, and people need good places to live.
Yeah, absolutely. So if you don't mind, I'm just going to share some of the recent transactions, and maybe you can just, talk on a couple of them. I want to look at a couple of the larger assets. So there was like a high rise in there, and then some of the smaller walk-ups, just to get a feel of the market and who the buyers and sellers are. So if you just bear with me for 2 seconds here. It should be right here. Can you see this okay, Peter?
Yes, sir.
So yeah, the one on the top left there. So this is Glenshaw Road.
Let's see.
The 72 unit apartment.
Yeah, well, so this transaction is somewhat historic. I sold this these two buildings, and then there's two other buildings just I guess it would be to the south of it, and so it's kind of an independent micro area where a significant client purchased both sets of buildings, and then they intelligently some years ago bought some neighboring land and have since built 50 more units, and I know that they have plans to build a bunch more. So huge landlord in town, very much like Adriano, but a larger scale, and the deals make sense. You buy it at a certain yield, even given rent suppression by the provincial government or any of the housing authorities, they still tick like a clock. They go up, and every 5-year period you can virtually in some cases finance your equity back out of it, depending on how you structured it going in.
And it's important to note that Peter doesn't just do multifamily. I mean, from what I've seen, you do all kinds of commercial, whether it be industrial, retail, office. You do it all. But from my experience, would you say that multifamily would be the most like stable, let's say from a lending environment?
Absolutely. There's no question in the hundreds of transactions that I've done. And the reason I can do this stuff is I had great training, 8 years of university, and then some great mentorships with through the learning curve. And of course I've had multiple assistants over the years. So teamwork builds a skill set, and allows you to master different aspects of the industry. However, to answer your question, multifamily is definitely the most stable. What I oftentimes say to clients, whether it's a buyer or seller, is 50 or 100 or 200 people aren't going to fail.
Yeah.
If you ruin your building with any kind of a threat, whether it's asbestos or bed bugs or what have you, then it's typically remediable, right? So you don't get the the potential catastrophic failure that you may from a weaker industry player in an industrial building, or a freestanding restaurant. I mean, it's just an entirely different investment vehicle and safe. It's, it's
Yeah,
the
I mean,
same.
with an industrial or commercial, you could be 100% vacant, and it could take you a year to fill that in some
Yeah,
cases. Whereas in multifamily, you can easily get another tenant.
you got it. It's I mean, the people that typically get into the, the retail or the industrial are typically far bigger players.
Right.
And, they have the ability to weather different kinds of financial, storms or pitfalls. So if somebody has a vacancy, I mean, that loss may benefit a heightened gain in another investment vehicle. So, but it isn't for everybody, is I guess the bottom
Yeah,
line.
it's definitely adds some complexity when you get into commercial, especially with leasing. They're so much more complex. It's a whole different, an entirely different niche in itself. I mean, you don't meet too many people who are. I'm an expert on office, and I'm also an expert on multifamily, and also an expert on self storage. People tend to gravitate to one or two of these and specialize in that in those particular areas. At least that's been my experience.
Right. Well, I'm smart, simple.
So I want to just ask about your clients for a second. Like on a transaction like this, I imagine, like you're mentioning, we have probably larger institutional buyers, maybe even pension funds or REITs, probably all the way down to like ma and pa operation or first time investors would call Peter up and say, "Hey, I'm looking for a 20 suiter in Prince George."
Right. So I mean, you got it. But I can tell you one thing, I certainly call a lot more people than call me. That's one of the fundamentals of this business, is to be active on the telephone. Well, and through different social media platforms and whatnot. But if you want to play on the field, you got to get in the game. And so I talked to a lot of people, and some of these bigger REITs or high net worth companies. It's building blocks of relationships going back 20 plus years.
Yeah, you nailed it with relationships. I know I've been doing multifamily for 20 years. And for example, the building I just got under contract with someone who I've known for 15 years, that just out of the blue, "Hey, Corey might be interested." So they gave me a call, and I was the only one at the table, and I managed to get the building. So relationships are key. And it really takes a lot of time to really solidify those. But
Yeah,
that's key.
yeah. Well, and I mean, from a broker's point of view, I tried to be somewhat selective of,
Yeah.
it's like, you might sell a high net worth individual, 5 buildings, but on the sell side, they're buying dynastically. They have, different levels of family or, company participation. So they don't typically resell. So, I mean, at least sort of a fundamental issue in our marketplace is that we don't have any of these, the American model. They have, rules for reselling and reinvesting and avoiding, really high
Yeah.
capital gains taxes. So, yeah, but
Cool. Yeah, definitely. We're not allowed to roll over and just keep growing exponentially in Canada. And the tax rules it's kind of a moving target. We're always changing.
isn't it?
So on a transaction like this, do you know what the price per door that it's sold for? Is that something that you're willing to share, or cap rates or that kind of thing? Just so people get an idea of what buildings are selling for in Northern BC.
Well, so the one that I'm working on right now, it's just these ones are somewhat historic, like a few years ago. The second one there, where it says high rise portfolio, and then it
Yeah.
gives a range of addresses. Well, that was
Yeah.
that was a huge sale in multiple cities, and then
Oh, okay.
due to the buyer's business model, a bunch of the I spun off a bunch of the assets to other investors. So that's a complex question.
Okay. Fair
Generally
enough.
cap
Fair enough.
No, fair enough. Generally cap rates are thereabouts, between 4% and 5%. And again, it depends. I mean, it's the key word for every transaction is it depends. And an example of that would be, if you've got an elder owner of a, just say 50 suite building, and, they have very limited turnover and the rents are historically far lower than a neighboring building. Well, an acquirer with a different skill set and a different, modus operandi might come in and, when suites turn over, they increase the rent substantially just due to
Yeah.
their business model, and they upgrade them. So,
Yeah.
so it's sort of a two-way street. You want to treat people really well, but they also need to experience, the market, market rental conditions. And, what's going further to that, the rents in most cities outside these bigger metropolitan areas are fairly affordable and, somewhat modest. I mean, you look at a one bedroom on the west side of Vancouver and it's, $2,000+ a month. Well, in
Nice.
the other communities, it's, a one bedroom is, 1,000, 1,100, 1,200. Well, that's a livable payment.
Yeah, and we're still under 1,000, in on the prairies right now too. I mean, we're still far below our rents in 2014. But I want to just bring up another point. A lot of these, I'm just going to go to a couple of the smaller transactions here. A lot of these these older vendors, the mom and pop operations, these people are maybe have lived in the building their entire lives. They've looked after it. They've shoveled the snow. Now it's time to sell. Well, now their tenants are their neighbors and friends. They maybe haven't raised rents in 10 years. Maybe the rents are still like 750. And now, like you
Yeah,
say, someone new has got to come in and try to
yes,
turn it over. Is that a common?
precisely.
Yeah.
Very, very
And
common.
it makes it tough for a buyer because, as people know, commercial assets, you lend based on the income of the building. And I know in British Columbia, because there's rent control here, it's unlike in Alberta. I can't just buy the building and just give rents to everybody on the day I take over. It's a little bit trickier than that in BC, correct?
Right. Well, okay, so which begs the question, how do you buy a building? Like what is your what are your financing terms? So in the case of a building where the rents are really low, and you see a steep learning curve of getting to know the building, the tenants, when people move, what the market reposition will be. Well, maybe you buy it with a, letter of credit or a 6-month open variable mortgage or a 1-year variable mortgage, or do you know what I mean? Like some sort of a demand inter alia um, financing vehicle. So that as the market, as your market, or as sorry, let me rephrase that, as your position in the market and the income changes, you can then transition to longer term financing and be comfortable with the rate, the amortization, the term, et cetera, et cetera. So it's a planning process at the end of the day.
Yeah, and it has to make sense for your investment model, whether, you're just, you're buying the building in cash for yield, or maybe you're raising money from joint venture partners, you're planning to repatriate your equity. I mean, it all depends on your strategy. Um,
Absolutely. And there's multiple strategies.
yeah. Yeah. So I just pulled up 3 transactions here. Now, I don't know who the buyers and sellers are, so we have a 17 unit on the left, 29 unit in the middle, and just a smaller 11 unit. So I don't know if you know the stories of these ones, but would the sellers typically be, I don't imagine these are big REITs or pension funds that own these buildings. Would these be smaller? Let's talk about the sellers first and maybe why
Okay.
they decided to sell
I'll
these.
just I'll
Yeah,
just quickly give you a synopsis
sure,
of each of these. So
sure.
in the case of the one on the, I guess it's your far left, it was a family company that had a few buildings in town. They purchased them and upgraded them, changed the rental structures, etc. And they actually, interestingly, this one ended up selling to a local realtor who, with a group of friends or colleagues, took it to another level and managed to sell it. and did well. I wasn't involved with that second sale, but I know they did well. In the case of the one in the center there on Ingledew, that was a very prolific dentist in the city. And, going backwards in time historically, a lot of the buildings like these were owned by professionals who, just basically used some of their, hard earned equity to buy a building like this. So in this case, it was a gentleman and his wife who owned it for many years. And I was privileged to sell it to a local woman who's since owned it. Did some hardware and roofing upgrades and whatnot. It's still a beautiful little building. It's got a park right across the street, and so it's done well. The one on the far right, on the Crestwood Manor, that was just same thing. Local owner sold it to another local owner, sort of a smaller genre, like 11 units is, it's very manageable. I mean, it's affordable to get into, with a certain amount of equity. And upgrading the suites, keeping the people happy, looking after the building. It's a great investment vehicle.
Do you are you able to share how much these buildings transacted for?
No.
Okay, that's okay. So just to, sort of what I'm gathering now is most of the transactions here seem to be happening from locals. So do you have a lot of out of town buyers? Like, is there people that, will buy in Prince George, or other places like Fort St. John from out of town, like percentage wise for your locals?
Yeah, really varies. Again, it depends. Someone like Adriano is, he's amassed hundreds of apartments in all kinds of sizes and shapes by, being local and buying the buildings at the right price. We're increasingly seeing more lower mainland buyers coming into these markets. And the reason is because they make so much better financial sense going in
Yeah.
than buying something in multifamily in these bigger cities. They kind of defy logic to a degree in that you're almost buying them for capital appreciation on the land and building versus income growth and, paying down a mortgage and having, excellent equity pickup, and then, always keeping it financed to a certain degree where it's going to pay well. And then of course, at different times, different mortgage periods, you can do what's known as an equity takeout and then buy another building like you do.
Yeah, I know. That approach definitely makes sense. Yeah, so there's been quite a few of these transactions. Like, when I talk to Adriano, I know my biggest thing is if I was going to call you up tomorrow and say, hey, I heard that there's this 20-suiter for sale, I want to put in an offer. My first thing is when I move to a different niche. So let's say I know nothing about BC. Who is going to manage this building? I mean, how do I, from a property management perspective, acquisition is one piece, but now I have to stabilize the asset. So I need boots on the ground in these smaller areas. So how do these, the buyers from the lower mainland, how do they navigate that?
Yeah, well, increasingly, to the credit of these, different northern cities, there are, highly intelligent people that have, begun management companies, and they do very well. So if you're a lower mainland investor, and I'm always happy to point people in different markets to managers, but again, there's a threshold. 12 unit building, or 12 or smaller, it doesn't typically, the optics of the transaction don't make sense to have a caretaker at that income level. I mean, you need sort of 30 to have a caretaker or greater. Typically a manager, an offsite manager who who helps with the building is what's needed.
Yeah, there's kind of a saying I know in, in my circles in Edmonton, you have to have 30 units to be worth your property manager's time. So those smaller 10 plexes, 12 plexes, unless your manager's managing multiple buildings in the area and then they can share a caretaker, it's pretty tough to do that. So a lot of people get by with an onsite, like you're
Yeah,
saying.
you got it. And typically, people that buy up to say a 12-suite building would have a friend or a family member, or even potentially themselves live in a unit, to learn the market. And then, of course, if you want to make it your career or your specialty, then you're building towards your next asset acquisition, aren't you?
Totally. So I want to just put my acquisitions hat on and say, okay, I want to buy a building, in northern BC. Now, I've heard of this building for sale, but I don't have any experience. So I'm going to call up, Peter, someone that does a lot of business. How do I present myself? Let's say I have some single family assets. I imagine you get a flood of calls all the time from a lot of newbie buyers, a lot of tire kickers, maybe a lot of people who don't understand how multifamily works. Maybe they're not pre-qualified. There are vast differences. Like you have to have a certain amount of net worth to qualify for the mortgage. How do you get your ducks in a row before I make that call to you and say, hey, please keep your eye open for a building I'm ready to buy? How do you kind of navigate that?
Okay, so part of my success has been just um, a common sense approach to dealing with people. If you call me and say, I have a couple of houses, or I have a fourplex or a couple of fourplexes, I'm looking to get into a larger building. Well, then we talk. We talk about what you may have as equity, what your long range goals are, who's involved with your company, where do you live? What is your comfort zone? Will you take an airplane? Will you take a bus? And everybody's so different. It's a very complex um, question to ask. Um, Basically, I act as a quarterback. Anyone calls me, I will do my best to help you. If the transaction doesn't work out and I'm not involved, well, I have enough business going on that, I if I see you in the market, I'm high fiving you, right? I'm happy. I'm happy. I'd love to see these markets grow for the right reasons. And that's a real fundamental. The right reasons are, you know, putting your best efforts into being in a project, you know, making your payments, keeping your tenants happy, having nice equity pickup, and advancing you, your family, friends, colleagues, careers, and their objectives and investment objectives.
I think that answers that pretty well. I know. So I instruct people on multifamily and how to get in, and how I got in is different. The market's changed. So the common thing that people seem to be worried about before they call a broker, they don't want to ruin the reputation. They don't want to, go off premature. So, they might email for a rent roll if they see something on MLS, but they're very reluctant to maybe call the broker and ask questions because, maybe, well, like what happens if I can't close? I'm going to ruin my reputation forever, this kind of thing. So, they want to kind of be in a certain comfort zone before they leap forward. Even I've seen people that have significant single family experience kind of go through that as well, because they're going into an entire different asset class. And the first transaction is always the trickiest for sure.
You got it. Well, good people will help you is all I can say. If you care about people, you care about, if you put, obviously the fundamental of our industry is that we are abided by law to put other people's interests before our own. So if you're new to a market genre and you call somebody and they don't respond to you if the broker doesn't respond in the right way, well, don't deal with them. What you want is people that are responsive, that want to get to know you in a business sense, just to see where the fit is. If you're going from single family homes to fourplexes, well, that's a great stepping stone. And then, of course, the 12 suiters. And, with the passage of time, if you've got children and whatnot, someone like Adriano who's now getting huge. He's now eyeballing, institutional level transactions. And I'm so proud to be part of his success.
And that was an amazing interview because he's one of the very few people that he didn't raise capital from investors. He started just with his own cash with one small building, just from some single family assets. And he's built it into a multi-million-dollar portfolio, all completely on his own, self-managing. So it's so impressive to see stories like that, and such a good guy too.
Absolutely. No, yes, I was up in Prince George 2 weeks ago and had a lovely luncheon with him. Yeah, super humble, not afraid to work hard, has, supportive family. And yeah, he's the poster boy of multi-million-dollar success by, self-starting initiative and caring about people.
Yeah. So yeah, exactly. So I want to ask you to put the forecaster hat on, because as I was looking at your resume, real estate forecasting was one of the items on the resume. And I know there's a lot of pretenders out there, especially if you're on social media, people that haven't been through a single downturn. Now you've been through many downturns. These markets are cyclical. We've obviously seen a big shift even from 6 months ago, when 8 months ago, when I could have got a CMHC mortgage for 1.5%. Now we're knocking on the door at 4%. How has the business changed in the last 6 months in the transactions you've seen?
Yeah, well, markets will, as you know, come and go. I mean, I think we've been on a global basis. If you look at other worldwide marketplaces, I think we've been awfully spoiled with virtually, you know, um, negligible bond rates. So there's some changes going on. Those changes will probably continue in the interim. I think the marketplace will normalize as the pandemic implications reduce. Um, you know, Maybe we need some changes in some governments. That's personal. Um, but the bricks and mortar of these different areas that I tend to focus in, the fundamentals don't really change that much. You know, People need to live someplace. They want to live someplace great. They want to be looked after, in terms of a quality asset. They want to participate in the economy. They want to do well. And that's always going to be a win-win. So if temporarily, you know, mortgage mortgage rates are a little bit higher than they typically are, well, it's it's kind of short-term pain for long-term gain, because your investment horizon for these types of assets needs to be very lengthy. You can't look at something, typically 5 years would be a minimum, a 5-year rollover on a mortgage. Then you, as an individual or a family or as a group of investors, get together and you say, are we renewing the mortgage? Are we going to the market? We're going to buy another one. We're going to sell half our interest. What are we going to do? So interest rates are a little bit higher. If they continue to remain high, we're going to need to see some expansion of cap rates. There needs to be positive leverage, particularly in bricks and mortar economies. We need, you need to have a cushion between a lending rate and a going in cap rate. And short of that, you really need to do your homework so that you have no surprises. You don't want to have a knife sharp cap rate going in and then all of a sudden have to do $100,000 roof or a boiler or pigtailing aluminum wiring or something.
Yeah.
Or you as a professional owner could have other reasons. But so rates are gonna hover around where they are, I would say, for 12 months or so. The world's going to normalize. I mean, this silly war has got to come to an end. I mean, we've got to come to our senses and get back to a normalized global business pattern. We've had a collision of some very, outlying events, a pandemic, an unwarranted war. So, then the other thing is the demographics are significantly shifting in North America. People are saying there's been, huge labor shortages. Well, the labor shortages are due to retirements and shifts in people's interest in where they want to earn their, income from. So, we need a lot of immigration. I mean, I always joke with my friends, we need 1 million hardworking Ukrainians. I mean, let's get them. These guys not afraid to work hard, right?
Gotta fight Saskatchewan for them, because my assets, I'm getting a lot of them because I'm actually Ukrainian background myself. So Saskatchewan that's where they're naturally one of the places they're immigrating to, and in-migration to Canada is only going to increase. But I want to just go back to one thing you said there, and I love the fact that this is a long-term game. I mean, people sometimes, it is possible that people flip apartment buildings, but my timeline was always a minimum 5 years. I was able to do that from 2003 to 2010 because we were in very strong markets in Alberta. But after we kind of got whacked, now I'm looking at, 10-year horizon with an option to maybe sell or refinance after 5. But if I'm going to pool a bunch of investors together, I'm going to say, look, guys, this is a 10-year commitment. We're going to ride this out. And like you say, in 10 years, you're going to have to do something. It doesn't matter what multifamily building you have. There's some kind of deferred maintenance unless it's brand new. You didn't plan to do the boiler, but shit happens. You're going to have to do this. You're going to have to do that. You're going to have unforeseen costs. You need reserves for vacancy, and all these things have to be, built in. So on a short timeline, that's pretty tough unless it's a really forced appreciation value add where you want to flip. But I just wanted to bring up one other transaction here before we move on. And can you see this one here, Peter? This was one that was this was in Williams Lake. So I just wanted to ask, so it said it sold twice in 19 months. So maybe there was some kind of a story behind that. Right. I don't see that very often.
Yeah, no. That's right. And it's just recently sold again. So in this case, what happened was some years ago, I, had a minivan, and I was privileged to be able to escort one of my favorite clients. It's a huge REIT. We spent a week traveling around the province looking at different buildings. And, this particular building came with a significant group of assets. And in this case, this particular building didn't fit their business model. So we closed on a significant portfolio and then flowed this asset through to a private investor for the second sale. And then they held for, I'd say between, sort of 7 to 9 years. And then for private business reasons, they re-merchandised it a third time. So terrific asset. It was underperforming at the time of the first sale. It was immediately remedied, improved management, some nice repairs and maintenance done to the building. So now it's a terrific home for 60 fine people.
I don't imagine, like, for people that maybe aren't familiar with Williams Lake, I mean, it's not a large city, and there's probably not that many 60-unit buildings in Williams Lake.
Yeah, you're right. There isn't. But if they're well built and well maintained, then they're, they re-merchandise 5, 10, 15 years at a reasonable return. They make sense. They make good business sense. It's far better than, in my mind, it's far better than a AAA capital stock.
Yeah, exactly. I mean, I love multifamily for this purpose. And, some of these communities, they seem to be a lot more stable than Alberta. Like I have friends that have invested in areas like Grand Prairie. I see you've done some transactions in Grand Prairie, areas like Fort McMurray, Cold Lake. They've been a lot more volatile with multifamily, with price fluctuations. BC seems to have been a lot more stable.
Yeah, well, I think part of it is our accessibility to the Far Eastern markets. We've got some good sized ports. We've got terrific air transportation. maybe there's some psychographics that I'm not highlighting for you here, and I'm sorry, but our cities are becoming increasingly well connected and vertically integrated in different industries, and it seems to me that they're doing sort of a higher level of cyclical repeating of ups and downs.
Yeah, no, fair enough. Um, so just looking forward again. So what it sounds like, so in the last 6 months, you really haven't seen, transactions or volumes or demand from buyers really taper off at all. It's pretty much business as usual.
That's not quite true. I guess
Okay.
I guess maybe I didn't highlight it properly enough. There is definitely a level of fence sitting right now, in so
Okay.
much as in so much as I've mentioned, we have 3 or 4 global events going on: pandemic,
Right.
silly war,
Yeah.
potentially domestic, discord in the um, political arenas. But the the US Fed and the Bank of Canada are trying to slow down certain aspects of the economy, and they're doing that by changing the bond rate. So in that the
Yeah.
bond rate has had, several increases, people are, depending, what their investment horizon is and who they are. Um, some people are saying, let's just pause and see what's happening here. And, we've got another Bank of Canada announcement coming up.
I think it's
Um,
tomorrow.
yeah, that's right. It's big. It's a big deal. Well,
Yeah.
but again, it depends. Depends. Some people argue that the increase in the bond rate um, helps CMHC or traditional lenders' rates drop. So
Yeah, I mean, for myself as speaking as a landlord who already owns assets, it's great because now there's less people becoming homeowners, and my demand has never been higher. At least that's kind of how it's worked on the prairies, but it's making it a little bit tougher to buy buildings. I haven't really seen prices change, but what I have seen is the loan opinions that I've got have gone down because of the ceilings they're placed, because of the debt service coverage ratio. If they're using a 1.2 or 1.3 DCR, well, now all of a sudden your loan has gone down, which has sort of artificially raised the cap rate without seeing the cap rate actually go up. But earlier you had said that maybe we're going to start to see upward pressure on cap rates because there has to be a certain spread on your yield and what you're borrowing at, right?
absolutely, and that's going to take time. That's a 12-month horizon. I mean, I stay in very close touch with a half dozen very capable province-wide appraisers, and we're looking at each other saying, well, rates are going up. The threat of rates are going up for certain types of investors. Where are you going to be on appraisals? And they're like, well, it's gonna, we're gonna need to see some refis that are made public, that are, protected. And we're gonna need to see some sale transactions where that is reflected. We need to create a pattern of change. And is this a temporal, sort of business cycle? Is it going to continue? Nobody knows for sure, but I think it's going to stabilize.
Yeah, I think so too. I mean, there's a lot of people. I've talked to a lot of people who do larger transactions, and the consensus seems to be that fixed rates maybe have peaked at this point. But then again, we're not really sure where things are going to go. But I think good quality assets are going to continue to transact in this market. I don't think people are
Got
just,
it.
there are people sitting on the sidelines. There is caution, but people are still buying product, right?
Right. The markets will continue to evolve and will change according to, all of the variables in a transaction.
Yeah, no, I like that, the fact that there's a lag there and it could take, I like the 12-month thing because I know people are probably wondering about that with, we saw what happened to residential, right? During COVID, rates dropped, prices, for housing just went through the roof. Now, talking about the relationship between, cap rate and yield, obviously, when the bond plummeted, in April of 2020 and basically stayed there until February of 2021, you could get a CMHC rate of, 1.5%. Did cap rates compress at that time in your market? Did you see that? Or did they still kind of remain the same?
Yeah, to a degree, depending on the asset. Every transaction is different, and it occurs for different reasons. But yeah, there was a slight compression over that 18-month period of cap rates.
So
They're
that's kind
great
of interesting. So sorry, continue.
they're great marketplaces. They're bricks and mortar. They make a lot of financial sense for a lot of people, and some of these competing marketplaces don't make financial sense.
No, exactly. So I just want to ask you about, I get asked a lot about the Lower Mainland in Vancouver. I mean, I drive through Vancouver. I see a lot of these older walk-ups. I imagine some of them are still transacting. How has that market kind of evolved over the last couple of years? Is there still a lot of volume?
Yeah, I mean, it's not my direct specialty, but I understand it intimately because I've lived in, Kerrisdale and Kitsilano all of my life. So yeah, they're transacting. It's more of a cash buyer or a high cash import buyer because they're buying for, 1.5%, 2%, maybe increasing to 2.5%, 3% on an outlier cap rate. Well, even in a great market, financing, with requirements for CMHC financing, it still requires a ton of cash to get into them. So it's a certain kind of
Yeah.
investor who's parking money, and they are intelligently getting capital increases.
Awesome. So I want to ask you kind of a question then. You do business all over British Columbia. Do you have a favorite market? I mean, if you were going to buy a building today, right now, would it be in Quesnel? Would it be in Fort St. John? Where Chilliwack? I mean, where
Yeah.
would you buy?
Well, what I really like about I really like Prince George. I always have. It's got a great airport, and
Okay, great.
so it's got tons of flights that go there. They're jets fly there, and jets don't fly into all these marketplaces. So what I like about Prince George is that not only is it easy to get to, but all of the roadways around it are excellent. So Prince George, Quesnel, Williams Lake, and then the opposite direction, Prince George to Kitimat, the West Coast, and even further up, in some of those other cities. So I really like the mall. I've spent so many trips going there. Just I love the outdoors, and I love the North, and I think the North deserves better business treatment, better recognition for its place in the BC economy. So yeah, I'd have to say Prince George is probably the most stable marketplace, but I like them all for different reasons.
Yeah, and we haven't even really talked. We won't get into it much now, but we also got, the industry that's happening right now, and the big one, which is LNG in British Columbia.
You got
So
it.
that's having a dramatic impact on the North.
Absolutely. And it's going to continue for many, many years. It's like how, Site C started as a planned project, and now it's just created all kinds of business opportunities for people that, either live in the community or want to participate in that, sort of local or regionalized economy.
Yeah, absolutely. Well, I want to thank you so much for taking the time out, Peter, for this interview. We covered a lot of stuff. I learned a tremendous amount in the last, hour here. So I really want to thank you for appearing on the show. How do people get a hold of you? What's the best way to contact you if people want more information?
Yeah, I have a direct telephone number. It's 604-691-6608, or my email is pseed So initial P for Peter and then SEED at NAI commercial, two M's in commercial, all one word, .ca. Yeah, I am open for business, my friend. Thank you so much for allowing me to help your business platform and your investment platform. And I'm here. Anyone needs me, I'm here.
Fabulous. Again, yeah, great resource. So really appreciate your time, and I hopefully we can do this again at some point.
Anytime you call it, you call it.
Awesome.